401ks and index funds in general, particularly the S&P 500 index, is not a equally weighted index. You buy more of the bigger stocks every time you put $100 in the S&P 500 index. I think Apple gets $7. And the Magnificent Seven get $35. So when you talk about people passively investing through their 401k, most of those dollars are going into S&P 500 linked indexes, and 35% of that is just going into 7 stocks. So what's interesting for guys like you and me is, what does this mean when we look at historic valuations? Because this relentless bid, in other words, passive 401k investors are kind of new to the market. Passive investing and 401k index investing is not new in and of itself, but we've kind of reached a critical mass. I think it happened in January of 2024, where the sheer volume of passive investing dollars passed the volume of active investing dollars. And I think that's a profound difference. And I haven't quite figured out what that means going forward, but that's an interesting topic.